morning, everyone, and thank you all for joining. I'm Michelle Johnson, the Event Marketing Specialist here at Process Maker. During today's webinar, we will discuss measuring digital readiness to drive your top objectives. Most institutions consistently list the same three objectives for digital transformation: growth, improved customer experience, and efficiency. However, many institutions are not ready to implement digital tools to achieve those objectives. Today, we will explore ways to measure your financial institution's readiness. We'll also explore how leading institutions are modernizing by implementing digital tools. Today's speaker is Chuck Wakocha. Chuck is our Director of Product Marketing and leads the product marketing efforts for our banking at Process Maker. As part of a stellar team at Process Maker, Chuck's role is to help define and communicate Process Maker's value proposition. Chuck's professional experience covers various disciplines and industries. These range from operations management, sales, human resources, to product development and management. Prior to joining Process Maker, Chuck was part of the rapid growth of SageWorks and MST components of Abrigo, where he served in many roles, including ensuring successful change management and the successful implementation of the allowance of loan and lease losses, stress testing, credit analysis, risk rating, and loan administration management tools to more than 300 financial institutions. At MST, he served as a senior advisor, helping institutions prepare for and implement the CECL guidance. As a thought leader, his analysis have been featured in Forbes.com, Inc.com, Huffington Post, and International Business Times. Chuck received a BA in psychology with a focus in organization and economics from Harvard University and an MBA from the Keenan Flagler Business School at the University of Carolina with a distinction in leadership. So if you have any questions while Chuck is presenting today, please submit them in the Q&A section and we will answer them following the event. Now I'd like to introduce Chuck.
Thank you, Michelle.
You're welcome.
All right. Thanks everyone for joining us today. I hope that this is going to be a very interactive session. As we look to assess this readiness, we will be conducting that with a little bit of polling. So we'll enter polls, there's about 6 of them to go through. And also you'll do a little bit of scoring. I think it'll help, to understand based on the responses to those, and scoring yourself there, where your assessment or our assessment together of your readiness, to implement and institute digital tools to help you achieve some of those objectives. Now, in this current environment, in this new banking arena as we see it, size and location are less relevant as they used to be in the past. They used to be that where you were was a big determinant of where you banked as a customer, right? Your proximity. And so in that, the branch strategy, putting up branches, having that physical presence was extremely important. And of course, again, that proximity to it, really mattered. But in today's arena, execution is really the key. And that execution is delivered through digital technology. And today we're going to look at how, what is that readiness? Where are you in your institution in terms of this? Now, when we think about this, I guess, this arena, right? The vast majority of folks, for customers have at some point opened up a checking account at one of the more than 14,000 plus financial institutions. And that 14,000 plus includes banks, credit unions, CDFIs. If you narrowed it down simply banks, you're looking at about 8,000 or so, and, spread across the country. And the overwhelming majority of these financial institutions are like you, small and mid-size, and relatively, small and mid-size compared to the behemoths, the B of A's, the Chases, the Wells Fargos of the world. And that is, of those 14,000 plus, only 170 of them are larger than 10 billion, right? That sounds a lot, but when you think about that, the Chases and the B of A's are in the trillions. I mean, that is multiple degrees of magnitude, above, right? So thinking about that 10 billion. So if you take that 170 out of that 14,000, you're looking at 13 1,830. Right, got to check my math here, right? So that is you. This is us. This is the pool of institutions that our customers have to choose from. That means these folks have options. I heard a comedian once say that a man is only as faithful as his options. I presume he was referring in a different context, but I think some of that may apply here. And really what that means is consumers have choices, they have options, and where to get their financial services. And they won't get financial services from you, from a brand, just because they like you, or because they like that brand. And this is, where a lot of folks really, pull back to that. We have a great relationship in the community. We have, our customers have been with us. Right now, as things are changing, folks are willing to go to those institutions that will provide them those things that they're looking for. The superior convenience, the personalization, the cost. And it doesn't matter if they're in Iowa or if they're in Vermont or in Florida. If they're able to get that service from them, that's where they're going to go. Right? For me, this option, I when I think about this and how consumer expectations have changed, I'm right there with them. I can shop mortgages, whether it's, from somewhere in Detroit, as Rocket Mortgage has really spread their wings across the country, right? I can shop mortgages across the country. I can buy my car. I'm in the midst of shopping for a car right now from my chair here, from this cushy seat here at my computer, and have it delivered to me. Right. And we're not even talking about like glasses that, where, you can get the box of 10 different glasses, try them on, ship them out without even having to leave your house, leave anywhere. Right. This is the same kind of expectations that our customers are looking for. So those things that we used to think about that would draw customers, right? The 65,000 ATMs across the country, that's no longer a draw. I mean, I barely use cash, and besides, and this is a big if I needed to withdraw cash, and the fees that go along with it, most financial institutions waive those ATM fees. So it doesn't matter that I'm using another ATM, as long as I'm not using the little one in the side of the 7-Eleven, right? I'm not worried about that. And as a matter of fact, thinking of the last time I withdrew cash, it was to go to the state fair, which happens once a year. So in terms of those things that draw people in, they no longer hold to that. So when I go to the banks, or when I go to a website and I'm looking for where I'm going to search for financial services, it's easy to filter from a myriad of services, looking for those things and looking for those characteristics that suit my needs. So I can, create a filter where I'm looking for banks that are web only, right? Online banks only, like the Allies of the world or others, right? If I want to have a local branch, where that presence is, right? If I'm looking for credit unions or any of those things that, check off the boxes in those filters, I can identify those. So when I see that, the rates are, relative to where I'm looking at, I'm like, well, that actually should not matter to me. I am competing, and I can look at these various institutions and those competing rates and competing features. So, when I think about this, and the point of that little anecdote is really to highlight that, this is what we already know. Digital is the new channel, and it will become the primary channel, right? And, to continue to beat on this, and we probably heard this ad nauseum, the reason for digital, the advantages that it provides, the benefits that it provides, institutions are looking at this, right? And last year, banks closed a record number of retail branches, and that was on top of the record in 2020. Obviously, 2020 was, a bigger push based on the pandemic environment. But as that continued in 2021, it was that banks continued to see that the need for physical locations, those branches, those million-dollar branches, the staff and all the operations that go with them are not as necessary to drive their objectives, right? So when we think about those key objectives, right, driving growth, improved user experience, increased efficiency all across the board. These are things that the financial institutions are able to deliver without the old strategy of the physical location of the branch strategy, right? So, when you go back to that digital, it's not that it will become the primary digital channel, but that it is becoming the primary digital channel. It's important that your institution is creating the features, the capabilities, offering those as much as you can for the services that our customers are looking for. And let me be clear, it's important to know that going digital is not a mutually exclusive proposition, right? It's not that we're completely doing this. There are circumstances and situations, especially the complex ones, where I prefer to have, a high touch. I prefer to have that relationship. I prefer to talk to someone. But for most of the transactions and things that I do, I want to be able to execute it from this cushy seat that I'm sitting in, right? So it tends to be having the best of both worlds, right? The almost a hybrid approach. So when we think about those three objectives, growth, improve customer experience, efficiency, we need to be able to execute those in the digital world as well. So taking steps towards digital transformation. For a lot of institutions, it has been an unsteady march, right? The term digital transformation for me sometimes evokes an image of, like a makeover, right? Like a makeover show where an old stodgy institution puts on a sign, says, please be patient while we are under renovation, and then reemerges as this high-tech facility that wows the customer. Now, I think that, kind of misses the mark a little bit, right? First, that idea, that imagery is still based on the physical branch primarily. Also, transformation tends to happen in bits and pieces with the implementation of digital tools and capabilities around different services in different service areas and different functions. So it can be piecemeal or going as, the institution's speed, strategy allows. And so that's what we're going to talk about today, and how we measure the varying degrees of readiness for the implementation of those tools, right, to drive those objectives. So as we look at these, the polls that we're about to take on are those that will be around these different areas. So in setting this up, what I would like to do is we're going to go to polls in driving this. And then we'll talk about those polls. We'll talk about the questions asked and what it means, some certain takeaways around it. And then we'll also score it afterwards. So if you have a piece of paper handy, you'd want to, or something there that you want to write down and keep score a little bit. So they'll be scoring around the responses. So we'll take the first one and you'll get an idea what we mean by that. So the very first area that we want to talk about, and this is kind of looking at what would all really be low-hanging fruit, right? One of the first places to address is digital forms automation. You're taking information, you're gathering things, and rather than having a PDF that's scanned in or a PDF filler, right? Digitizing that those forms, being able to ingest that, right? And that if we're thinking about this digitally, not having someone print out a form, scan it, scan it back in and be submitted, but being able to take those forms and automate that in a way that's easy to ingest for the institution. So this first question: are you currently using a forms automation solution at your organization to digitize internally or customer-facing agreements? So I'll launch a poll to ask that here, and let's get an idea of what our group here thinks here. So you should be looking at the poll here. Just confirm with me that you're able to see that. Michelle, are we all able to see that? Excellent. Yes. Right. So are you currently using a forms automation solution at your organization to digitize internal and or customer-facing agreements? Select one, right? And for the person who is calling in, the responses are we have no plan to adopt, or I don't know. Evaluation of it, but no established timeline for adoption of this. We are actively pilot testing or experimenting, or we're using something on a limited basis or for very specific use cases. And then we are scaling out for all applicable use cases. So we're in the midst of, putting something in play. And we are fully executed for all planned use cases. We are moving very well on that. So it looks like we have one more response waiting, or I guess that would be probably the person calling in. All right, so we'll end that poll and look at the results here. So in those results, we see 17% don't have any plans. Some folks, 8% are evaluating, but no established timeline for adoption. So they're actively looking, right? 17% are actively pilot testing and experimenting something. The majority of folks, 42%, are using on a limited basis and with specific use cases. And there are a couple of folks on the other end of it who are scaling out in the midst of pushing it out to all applicable use cases. And we have someone who is fully executed for all planned use cases. That's great. And so in that, we then look at what that means. So this is where the scoring comes from. So based on your answer, you would score yourself accordingly. So as a tally sheet, if you have no plans to adopt or don't know, give yourself a 0, right? You can kind of see where this is going in terms of scoring. If you're evaluating but not established timeline, have not established a timeline for adoption, the score will be a 1. If you are actively pilot testing and experimenting, score will be a 2. If you're using on a limited basis for specific use cases, that will be a 3. If you're scaling out for all applicable use cases, that will be a 4. And if you, the person who's fully executed for all planned use cases, that will be a 5. All right, so what does that mean? What is the takeaway from this, right? This is low-hanging fruit, as I mentioned, using a forms solution to collect information, and allow folks to almost have somewhat of a conversational style of getting information. It makes it easy to gather information, makes it easy to ingest, not only for the customer, but also from the bank, right? From the customer side, whether I'm on mobile or whether I'm at the coffee shop on my laptop, I don't have to scan information. I don't have to go anywhere physically to do this, but I can provide this. And of course, where this is all going in the end, being able to drive an end-to-end process across, right? So this is one of the easy areas, one of the low-hanging fruits in the entire digital ecosystem. So being able to automate and transfer, the ingestion of forms, excuse me. Again, if you have questions, feel free to write them in the Q&A slot there. We'll also take a little bit of time at the end of the session to go through and have some questions. One of the important parts of this is as we are looking at this, the different areas you are in, the conversations that will come from that, what are the best practices? What are different institutions doing in my certain case, my size, my particular sort of circumstances? What are the things I should be thinking about as I move through those? So second question, we'll also go into a poll in this as well, right? So going through this, are you still using Excel, right? Excel is it is an incredible tool, but it has its limitations, right? I think, for those of us who love Excel, for the value of it, that doesn't mean for the areas and things you should continue using it in, you should still continue using those, but across the board at the institution, utilizing the software-based solutions. And while this session is not about the pros and cons of that, I think it is well established and well understood that going to a software-based solution is the way to go and all the value that it creates. So are you currently still using Excel, or are you using a software-based solution and in any of the following areas? So let's launch this poll here. So are you currently using a software-based solution in any of the following areas? So this is a multiple choice based question. Are you using them with origination systems for loans or deposits? Are you using them for credit underwriting and credit analysis, for loan monitoring, for the allowance calculations or your CECL guidance calculations, or in any other areas? So if you have implemented software solutions where you previously, especially using Excel or a manual process, this is what this is addressing. So in those various areas, are you using software-based solutions? So again, it's multiple choice. Click all that apply. For those who are wondering, or there's a legion of webinars, thought leadership pieces on the benefits of utilizing software-based systems as opposed to Excel. From the minimum of where fields may break, version control of those, whoever the Excel master or the creator of it leaving the institution, right, and being stagnant in those, fat fingering, things on the field entry and breaking formulas, and these things can have massive implications. But again, where we can have another session, or if you dig deep enough into the recesses and deeper pages of Google, there may exist some webinars and thought leadership pieces that I did on some of these somewhere. But I think at this point in 2022, I think we fairly know and understand what that is. So our responses here, let's look at the results of this poll. Are you currently using a software-based solution instead of Excel? 44% of our folks are utilizing it with the origination systems for loans or deposits. The bulk of them, at 67%, are using it for underwriting, for credit analysis, a few for loan monitoring at 22%, a good chunk at 44% for allowance calculations for CECL, and then another 60%, almost 60% in other areas. Again, this really matters in the scalability, the portability of the solution, right? And again, where you kind of see where this is going, moving into automation, moving into digital processes. Excel is a step up from manual, from paper-based, from the stone and chisel of bygone eras, right? This is the next step. But if you're using Excel, translating what you're currently doing or moving into the next stage in utilizing software-based tools is the way to go. And as an indicator of where you're moving, the more software tools that you're utilizing, the better it is in terms of digital process and managing that ecosystem. So the next solution, the next question here that we'll go into is, or at least, I'm sorry, let's score this, right? Let's score the software-based tools. So for every solution that you selected, give yourself 1 point, right? So if you selected multiple areas, 1 point for each area that you scored in, right? So if you have both origination systems and your allowance calculations, that's 2 points. Again, for every situation that you selected or made a selection in, give yourself a point in that. All right, so we will again look at the results of this for what folks did, where we are in that. The majority of the folks were utilizing it at least for underwriting, for the credit analysis, then along the way for allowance calculations and origination systems, and in other areas as well. All right, we're almost moving through this fairly well. So the next question: in which channels have you automated the delivery of an execution of digital agreements, right? So if we're talking about digital channels that you've enabled for your customers to utilize. So as we launch this one here, the digital channels, the selections, in which digital channels have you automated the delivery and execution of digital agreements? Pretty much anything, right? Whether it's account opening, all the agreements, compliance docs, have you enabled digital channels for them to access? So your web, right? Online or mobile. If you have a specific app, a dedicated app, a bank app in which you're able to deliver this. Of course, if in person and in branch, this is what we should expect. We should at least have that. Some folks have created virtual branches and the utilization of the ITMs, the integrated teller machines. So they're able to talk to someone, and it's somewhat a little bit different from call centers, right? But again, what we're looking at and thinking about is the various channels in which you've enabled your customers to be able to execute the functions. And of course, if you don't know or if none of these apply, I'll select those as well. All right, let's go here and let's look at the results. So what we're finding and what we're seeing from our group here is that the majority of folks, overwhelmingly at 90% almost, are enabling via online or via mobile, which is fantastic. I think as consumers now we live and die by our mobile phones and our digital world. When I look to travel, it used to be that you had to check that a hotel had Wi-Fi or give you Wi-Fi. Now, if they don't, why should they even exist? When I look at Airbnbs, even, I want to see if they have Wi-Fi. And then it used to be coffee shops that they have Wi-Fi. Now, even at the bar at night, I want them to have Wi-Fi. I expect Wi-Fi everywhere I go. So having access to online to mobile is essential, right? And when I'm just talking about, my data, I'm talking about actual Wi-Fi. I look at my phone and I think that it is upwards of 10 times more powerful than the computer I had in college and I did all my work in. Like, this is the world we're living in, right? So the mobile app, there's an app for that. There should be an app for that for pretty much everything. So these things are expected. And I think what we're seeing here is at least most folks are doing very well in that and have something in those. So in terms of scoring, similar to the last one, is a multiple choice. Give yourself a point for every selection that you made. So in multiple selections here, 1 point for each of those. So if you have a mobile app and delivering their web and online, so that's 2 points. Obviously in person and branch. So everybody should have a point. I'm thinking you may not have answered this, but they really should, have an in-person there, that delivery, right? So I can sit down and go through those. Sometimes this may be a kiosk, or this may be a fully fleshed out station at the institution to be able to, dynamically deliver those information without having to without having to write in on paper forms. All right, so we got couple more here before we finish, and this is a pretty easy assessment that we're going to be looking at. Again, what they are indicators of where you are as an institution and where you're headed. All right, so e-signatures. All right, the use case for e-signatures, there's quite a bit of that, right? Whether it's, onboarding, for your customers and account opening, for those of us who've attended previous sessions, previous webinars with Process Maker, this is an area that we've talked about, over and over, the account opening process and being able to drive that digitally, right? The account maintenance component of that, being able to update information, right? And be, tying all of those things out with an e-signature. Internally, right? Hiring and employee onboarding, in 2020, most of, into 2021, a lot of our staff were working from home, right? I hired staff from home, right? I hired staff in Colorado, in Florida. I'm in North Carolina, by the way, right? So being able to go through that employee onboarding, right? Folks at our call centers, all those people in different areas, being able to tie in at the end with an e-signature. So everything that we're looking at internally with our staffing, hiring, onboarding, externally with our account opening, mortgage applications and renewals, NDAs, other legal agreements, lending things, right? Notarizations, pretty much across the board should be able to, drive those. So here is our e-signature poll there. Are you currently using e-signatures in your agreement processes? And like before, select all that are, this is a single selection, not like before. Select one, right? Almost like the first question. Currently, I don't know, all right? Or we don't have any plans to adopt. Or second, we are evaluating, but no established timeline for this adoption. Third, we are actively testing and experimenting. Fourth, we are using on a limited basis for specific use cases. Then we are scaling out for applicable use cases across the institution. And finally, we are fully executed for all planned use cases. So thinking about all those various use cases, and there may be some that I did not mention, but the takeaway here is in experiencing the many benefits of digitization, you can go through all this, you could automate things, but then at the end, in that last mile component of it, as you near that line, being able to complete it with an e-signature. If I'm doing other things digitally, I should be able to complete this as well. If I filled out an application online, if I've gone through digitally, I shouldn't also have to get up and go to the institution and submit a signature. I shouldn't also have to scan or print out a paper, sign it, rescan it, and resend it. I should be able to complete that with an e-signature. And I think all of us at some point, I would hope, have utilized some DocuSign function somewhere or the other. I expect the same thing with my financial institution. So it looks like we're almost done here with the responses. And so let's look at the results there. So what we find here is that at least half of us are utilizing this on a limited basis for some specific use cases. A few folks here are on the I'm not sure or no plans to adopt. And then they got a few folks here scaling out to all applicable use cases. All right, so as we look at that and think about where we are in that mix, oh, looks like I've gone through a little bit here. Where we are, again, most folks are utilizing this on a limited basis for specific use cases. So scoring, here you're going to score yourself in that graduated scale. Are you at the end where you don't know, or this doesn't apply, there's no plans to adopt? You're going to give yourself a 0 for that. If you're evaluating but no established timeline, that's a 1. If you're actively testing and experimenting, that will be a 2. If you're using on a limited basis for specific use cases, that will be a 3. If you're scaling up and applying to applicable use cases, that will be a 4. And if you're fully executed, that will be a 5. All right, so we have one more thing here, and this will, provide us with the results of this readiness and this measurement here. KYC. This is probably where it makes most folks nervous, right? In the in-person experience, we take for granted that the person in front of us is who they say they are, right? They're sitting across, we hear them, we see them with our own 2 eyes. But digitally, there's a fear that it could be somewhere, in Eastern Europe, or in a middle of nowhere. We don't know who that person is. So that KYC, that know your customer, is really important. It's important for risk and fraud, for compliance, and all those things that we need to validate in the digital world, right? This person is who they say they are. They're providing information. So there are a number of things in validating in the KYC, right? The identity verification and authentication, the validation of the documents provided. So when we're thinking about this, there are different options, and this is another one that will require a multiple selection. what methods are you using or are being used by your institution to verify a user's identity before they access and sign digital documents? So in that, launching the poll here, which methods are being used by your organization or your institution to verify a user's identity before they can access and sign digital documents, before they can apply for a loan, before they can apply for open up a deposit application? So starting at that, not using e-signatures of any kind, right? So what we're looking at that is that they're being required to print out a document, to have a wet signature, whether they send that back in after notarization or whether they come in branch to do that. Having, and again, these are multi-selections here, right? Having the ability to utilize biometrics, so the scanning of the face. Quite often what this looks like is someone will upload their driver's license, but the biometrics will scan their face to match it to what's on the driver's license and what's provided there. So in real time, they can validate the document and the person submitting those. Again, the document verification itself. So when I scan my driver's license, running it against the background check tools, the DMV, and all those watch lists to, one, validate that the license is valid. It hasn't expired, but the person, again, who's submitting this has provided proof. The use of one-time passcodes, all right? So as part of a multi-factor authentication, suite, this is typically what you would see. When I authenticate in, I'll get a one-time passcode, enter that and move in. Knowledge-based authentication, these are those out-of-wallet questions, right? I live at this address. I have a loan with this car note or this financing institute. I know this person, or any of those that try to validate that those answers are the answers that only should be known by this person, generally pulled from the credit report. So whether it's TransUnion, Equifax, or Experian, it's where that's coming from. That two-factor authentication, email, phone, passwords as well, right? The you are not a robot, pick these squares that have a stoplight in it or something along those lines. Of course, pins and passwords, emails. So again, this is a multiple choice solution. If you are utilizing any of these, multiple of these, select all that apply. And then of course, hopefully, if you don't know, or if you're not sure what authentication measures are being used, then you make that selection as well. All right, looks like we have most of our folks who are participating have answered. And results here, and what we're seeing is that across the board, we have a number of results here. So looks like it's a good spread. ID, document verification, one-time passcodes, knowledge-based authentications, pins and passwords. Those are, at least over 50% of folks are utilizing those. Two-factor authentication, great. Excuse me here. Unfortunately, it looks like someone who's not sure or that they're utilizing anything to authenticate before users can access or sign digital documents. That's a big gap that you should, really pay attention to and really try to address. So let's score this, right? When we think about what that looks like, this is another one where you can give yourself a point for every response, right? So for each of these, give yourself 1 point accordingly. So I'll give you guys a quick moment to add those scores, tally them all up, and get your total sum of the score. As you can probably assume, this is a sliding scale with the higher the score, the expectation of digital readiness. Okay, so looking at what the scoring means, if you scored greater than a 25, that means you're born ready, you're born digital, your institution is ready, all systems go. You guys are doing well. Obviously, this is not a true gap analysis to find out what things need to be done, but ultimately, this should provide a good assessment of where your institution is in terms of readiness. Yes, this is not very scientific, but it should give you a gauge of where you might be in that digital readiness. And these things are typically, based on what leading institutions are doing, right? These are best practices across the board and putting those in. And when we think about digital transformation, there tends to be those who will bring in, consulting companies who will do a full-on assessment across the board, everything, and say, here's a plan, here's what you need to do, to fully transform, that kind of makeover thing we were talking about. But in practice, what we tend to see more is, starting with different functional areas or different capabilities and adding to those as part of a larger strategy of digital transformation. So if you are greater than 18, that means you are hitting your stride. That those folks who are in the process of implementation across, use cases. If you are greater, 12 or greater, that means you're making moves. You're adding those in some applicable use cases, and you are, starting to, really pick up steam in moving into the digital space there. If you're at that 8 point where you're barely sticking your toes in, I would say you need to continue and accelerate what you're doing into digital transformation, right? This is, you are at the point where, things are starting, you're starting to fall behind, really, to be honest, that institutions are doing this. And I say this because, again, it's the customer, right? The customer's expectations. If you are barely dipping your toes, you are running the risk of not meeting those customer expectations. Those objectives that we talked about, growth, efficiency, user experience, that's not getting it done if you're barely dipping your toes. Now, if these things are in process or these things are, being planned out, over the next couple of quarters, I commend you, but those things need to be accelerated. And if you're at 7 or above, I think what you're saying is that you're deciding to stay in a stone and chisel, or you are going to, stay locked down in serving the Amish community solely. That may be where, and part of me, like some of us, there's still some institutions that have the wooden posts out front. Michelle, I've been to a few of them, and depending on your market, you still serve those. But if you're at this point here, you're saying I'm only going to serve those. I would encourage you to really think about how you accelerate those. Now, we've covered some ground in this, and one of the challenges is that there's a lot to cover, right? It can be overwhelming. Where do I start? What is the best place to go to it? And of course, rather than, giving a, here's the first thing you do, here's the second thing you do, a lot of that actually takes a more bespoke understanding of your institution. Almost, when you hear that phrase, prescription before diagnosis is malpractice, right? That's kind of the situation here. Now, there are best practices in adopting those. A hint to that would be some of these areas that we talked about, e-signatures, providing the digital channels that folks can go into. If you don't have, online banking, the apps that allow people to at least get information about where things are, right? Being able to originate, some of the tools and, thinking about customer facing things, but internally, just, some of those loan underwriting tools that should be automated and driven to a decision, into a credit memo, into a loan presentation that it used to be, taking that stone and chisel, taking the abacus to calculate the, DSCR and then transcribing it into those should be automated. So if you leave today with, one parting takeaway, right? It is that your approach to digital, right? Assessing that digital readiness, we gave you an idea of where you are. So based on this, that should give you an understanding of how you compare to, in the landscape, where other institutions are. So that takeaway is omni-channel, right? Providing our customers, providing your customers, when we're thinking about external facing, with the ability to execute on the functions that they need. Omni-channel really means meet the customer where they are, right? So however I want to accomplish these things. If it's digital or in person, I need to have that option as a customer. Because if you're not providing it, I'm going to go to someone who is going to provide that for me. So that takeaway, where we are in the transition is that it must have a hybrid model. We still have our branches, we still have our high touch, our human portion of it, but you should also have a highly focused digital approach, right? As we go, as we have grown up in the human world, I think Michelle and I'm gonna date you a little bit here with me. We still, we were in the stage where pagers moved on from doctors to everyone else, and you still had to, get paged and beeped and, walk around with a couple of quarters in case you needed to make a call. Or say quarters. Some of us remember enough where it was dimes, right? So in that, we've grown up in that world, but now we are in a digital world. So having the option to deliver both is extremely important. And again, I'm shopping for a car, and I'm not going to a dealership till I have selected a car. If I want to do that, I fully expect them to pull up to my driveway with the car and let me drive it from here. But I'm not going around and sitting in the 4 hours, getting the runaround with the institutions. I will have my financing. I will have that all done before I even get on, and search for the car. So that is the experience that we have. So the digital and the human are not mutually exclusive proposition. They require both. Unfortunately, not enough folks are focusing and pushing the digital portion here. So that's the end of our session here. For those who have questions about this and what we offer, please don't hesitate to contact us here at Process Maker. Or if you just want to ask and talk a little bit more deeply, don't hesitate to reach out to me directly. I can be accessed easily. And looks like I was a little remiss in providing my email address, but it's pretty easy. Chuck@processmaker.com. Love to chit chat and talk with y'all. But more importantly, want to thank you for your time and for joining us today. For those who registered, you will get a recorded version of this. And want to thank you for your attendance, and go enjoy the rest of your day and be productive.
Thank you so much, Chuck. And let me just say, my favorite analogy from this morning, stone and chisel. Love it. Absolutely love it. Head on, perfect. As Chuck said, thank you all so much for joining us, and we hope you'll join us again next month. Have a great day, everybody.
Bye now.